So there's some key stocks on the watch list that I'm looking at today, April 9th, 2020. Now, the key on these watch lists is these are watch lists. These are not buy lists. You have to buy them in the right market, in the right sector, at the right time, get all your probabilities lined up. Otherwise, you should wait for the right pitch. There's no reason to jump in when you don't know what the market's if the market has a trend or what the market's going to do. None of us really knows what the market's going to do, but we're trying to catch a trend and we want to catch it with probabilities. So here are the rules that I use, some of the rules. Buy only at the highest probability spot on the chart, which is the pivot. You're going to buy on strength and an early stage basis. Never chase a stock in a late stage base. 40% of breakouts are going to fail. So if you remember that, you got to get out quickly. You can always buy back in. Don't lose more than 7% from the proper buy point, rule number one. Trade with the trend of the market and the sector. A lot of strength, a lot of probabilities come from the direction of the market and the direction of the sector. So try to find things that are, in relative strength sectors that are high. Don't buy all at once. We don't plunge in. We wade in a little bit at a time. We add on strength. We start with about 50% of our position. We might even start with a probe first, just to throw a little probe out there, see if we're right. If we're right, we add. Then we get to 50%. We add a little bit more and a little bit more until we get 100% of the position that we want. And then we ride that position as long as it's green. So here are the stocks that are on the watch list, and then I'll go through a couple of key ones after. So DocuSign, Vertex, NVIDIA, Eli Lilly, CNC, VipShop, BIIB, Biogen, Amerisource, Bergen, Novo Nordisk, Amazon, Neo, Netflix, and Abbott. So these are the ones that are on the list right now. There's a lot more on different lists, but these are the ones that I'm looking at pretty heavily because I like to trade, heavily traded stocks. We're not a value investor. We don't buy penny stocks. We buy highly capitalized, well-followed stocks by the institutions. All right, let's go quickly. DocuSign. By the way, these have all been screened for fundamentals, earnings growth, sales growth, number of shares traded. They've already been screened for all of my fundamentals. So these are the ones that finally made it to my list, and these are the ones I'm looking at. So taking a look here at DocuSign, you can see that it's really close to a breakout point right in this area here at around the $90 area. So that's pretty good. Relative strength, I always look for a high relative strength. You can see that relative strength line, and the relative strength rating is 97. By the way, I use MarketSmith, so thank you to MarketSmith and IBD for these charts. Vertex, you can see right near the pivot point here at right around 260 bucks. I think 250 is the pivot point, somewhere in there. Nice relative strength, very strong stock. They develop commercial therapies for cystic fibrosis. And you can see we've got volume increasing and we've got volume strength in this crazy market. You can see the downtrend in the market here, and this stock has been bucking that trend. NVIDIA, artificial intelligence play and camera play and whatever, graphics play. They do all kinds of great stuff. They're in an early stage base. They've had a big correction. They made a lot of headway back on that correction. They hit all-time highs, and then we had our coronavirus correction. 96 relative strength. They're performing better than 96% of all the stocks in the database. So that's ready to break out. It's still got a little bit of ways to go to show some strength, but it's building cause to move up to that $300 area and break out. Eli Lilly, you can see it's building a base on base pattern, and they're in the drug business, the pharmaceutical business. That's pretty hot right now. And the return on equity, by the way, is really high, 90%. That means the management is making 90% on the money that you've given them. Now, they're doing it with high amounts of debt, but debt's cheap right now. So if you look at it like that, like, okay, they're using debt to finance 90% return on equity, and they're getting 15% earnings growth out of it. That's pretty darn good when you look at these numbers, okay? So you've got a nice breakout getting ready to happen here around the 145 area, 144, something like that. Eli Lilly. Centene, CNC. This one to me is probably the best one, showing the most strength relatively in this market. You can see it came down with the coronavirus, came down pretty strongly, and then had a pretty strong rebound. Look, it's right back up to its highs. Not its highs from back here in 2018, but pretty close to its recent highs. And it just tested those highs, and if it could build cause and build some volume, which I don't like down here, it's not enough volume. Now we're going to talk about a breakout. And this is showing some really great stuff through government subsidized managed health programs. Netflix, everybody's staying at home watching Netflix, and when people go back to work, they're still going to keep their subscription. So Netflix is showing relative strength near its all-time highs back in 2018, and it pulled back during the virus, but people are realizing, hey, look, this stock's probably going to go higher. 92 relative strength, and 74% earnings growth rate, 29% return on equity, doing a lot of good things here. So Netflix is building cause, and they're making a tight pattern in here, looks like ready to break out. So those are the key stocks on the watch list. Pick the right probability. You've got to get the market aligned with you. You've got to get everything aligned with you. You put the probability on that chart, and then you manage your downside risk. When you do that, let's say you lose 7%. Well, that means our goal is to make 20 to 25% on every trade unless we catch a real breakout. And there are rules for that. If we catch a real breakout, then you can lose 7% on 3 trades before you break even, and you can break even on 1 trade that makes you 21%, right? So we don't want to lose more than 7%. Let's keep our losses small and try to get our gains big. And when we buy at the right probabilities, hopefully we're better than a 3-to-1 ratio reward to risk.